Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look, an updated quick look at the dollar versus yen is extending to new session highs. It looks toward the May 2024 high. Let's get started. Start off by taking a look at the 4-hour chart, and the May high that we saw came in right here at around the 158 level, 157.989. That's close enough to 158. We're currently trading around the 157.70 level. It's only about 28, 29 pips away from that May high. Recall that toward the end of April, the price moved above the 160 level and moved all the way up toward the 160.29 level before we saw some intervention. Then the price quickly rebounded back to the upside in early May, found other intervention near that 158 level. So we are getting up toward those levels where the Bank of Japan may be inclined to start to either jawbone or actually come in and intervene in this currency pair. We had a Bank of Japan official talk this morning talking about the disabling weaker yen, which could lead to higher inflation down the road as well, and force the Bank of Japan to raise rates in order to combat that. So be aware of that as we move higher and higher, that these levels were levels of interest by the Bank of Japan. So we have to be aware and prepared. But for the time being, however, the price today moved above the old high from earlier today near the 157.40. We also moved above the old high going back to last week's trading. That level came in right here around the 157.19 level. So getting above the 19 and 40 level sets those levels now as support. If the price can stay above those levels, the price can continue its run to the upside. If we start to move back below those levels, there may be some disappointment on the failed break in this currency pair. Let's take a closer look at the hourly chart, see if we can make any other sense off of that chart. And what we saw in trading here today was that on the dip here, the low for the day, the market did find support buyers against its 100-hour moving average. That level currently comes around right around the 157 level. So a nice round number on the downside to be aware and prepared. Traders who want to perhaps keep a more bullish view on this currency pair might not look at the 40 level or the 19 level as levels to get out, although they do give traders some cause for pause after the failed break. But they may also look toward the 100-hour moving average as a level of interest. That level also happens to correspond with this trend line right here. So that trend line is moving higher, and so is the 100-hour moving average. It might start tracking together to the upside and give traders a nice little sweet spot where there are dual technical levels. Those tend to be good technical levels for traders. So that's my updated look on the dollar versus yen. The buyers are taking control, making a play. We'll see if they can keep that control going with a move toward the May high. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.